Hello friends, welcome to your own channel Noiseless Investment. Here we try to decode a company based on the fundamentals and get to know if the company is worth our investment or not. Please note I am not a SEBI registered advisor and these are my personal views based on the fundamentals of the stock. This video is for educational purposes only. Please do your due diligence and please consult your financial advisor before making any investment. So today we are going to do a fundamental analysis of UPL. Please like and subscribe to my channel in case you like this video, and click on the bell icon to get the useful information on a regular basis. So here, this is the website of UPL. You can go through this and get to know more information about this company and its various products and what exactly the company is into and what they are developing. So now let's move on to the fundamentals of this company. So if we look into UPL, then the current market price of this stock is 674 and it fell by 0.71% today. If we look into the market cap of this company, it is 50,628 crores. And if we look into the stock PE, it is 13.8 and the industry PE is 26.4. So it is cheaper in comparison to the industry. Now if we look into the stock ROCE, then it oscillates between 13.5 till 15.8. Now if we look into the ROE, then it oscillates between 13.5 and 16.4. Now if we look into the debt on the company, so the debt is quite high, that is 0.8. Ideally it should be less than 0.5. The face value is 2 and the dividend yield is 1.48. So the dividend yield is quite good and the interest coverage ratio is 2.8, which should be greater than at least 5 interest coverage ratio, and the current ratio is 1.45, which means that the management is very effective in managing the cash and the other reserves the company has in its deposits. Now if we look into the promoters holding, the promoters holding is 32.4, which is not good. It should be ideally more than 50%. And if we look into the FII's holding, it is 38.7 and the DII's holding is 14.4. The changes in promoters holding is 1.61. So the promoters, they have purchased their own stock and they have increased their stake in the company. Now if we look into the changes in FII's holding, it is 1.51% and they have increased it by 1.51%, and the DII's, they have reduced their stake by minus 1.8%. If we look into there are no pledged percentage. The sales growth is 15.9% sales growth CAGR, and the profit growth CAGR is in negative territory. Now if we look into the sales growth for 3 years, it is 14.4, average sales growth for 3 years, and the average profit growth for 3 years is 19.7. And for 5 years, the average sales growth CAGR is 25.2 and the average profit growth CAGR is for 5 years is 12%. So in the last quarter, it is it degraded by minus 45.5%. If we look into the EPS, so this stock is making 47.6 rupees for you in an year. And if we look into the operating profit margin, it is 19%. So the company is taking 19 rupees out of 100. And if we look into the PEG ratio, it is 1.15, which leaves room for the company to actually grow. Ideally, it should be less than 1. If we look into the ROIC, what exactly is the amount it is giving on your invested capital, it is 12.6%, and the Altman Z score is 2.52. So it is on the borderline. And if we look into the Piotrowski score, it is 7, which specifies above average financials. Now if we look into the 1 month return, it is minus 2%, return over 1 week is minus 1.33%, and the return over 1 day is minus 0.71%. So clearly the stock is in downtrend. Now let's move on to check what exactly is the beta for UPL. So the beta is 1.19. So this moves ahead of the market by 0.19%. Now if we look into the score for UPL, so the stock score is coming out to be 5 out of 10, and the earning is 3, fundamentals is 5, relative valuation is 8, risk is 9, and price momentum is 2. Now if we look into the chart for UPL, and then we can see that it is consolidating in this range for quite a time. From 8th of May, you can see this started falling from since long back, but this is consolidating in this range itself. This is the range, and if so the stock has got good support over here at this range, in this territory, at around 640 level, and then if it will fall, then probably there are fair chances that it may fall down to 600 or 580 levels as well. So if we look into the RSI is 43.32, and the volume was in alignment with the normal day's volume. If we look into the MACD line, so the MACD line is moving in cognizance with the red lines of MACD here. So ideally it will find support over here, but if it will fall from this level, then there would be a sharp fall till 600 and thereafter till 580. So please do your due diligence before investing and consult your financial advisor. I don't have a buy or sell recommendation for this stock. Now if we look into the fair value for UPL, then the fair value of UPL is coming out to be 907. So there is a potential upside of 34.7%, and the uncertainty is low. The spread is between 434 and 1052. So these are the pros and cons of this company. Now let's look into the Benish M score. It is minus 2.46, which specifies that the company is not a potential earning manipulator. Thank you for listening. In case you like this video, then please subscribe to my channel and click on the bell icon to get the useful information on a regular basis. Thank you for now. Have a great day.